I've got a question for you. Would you rather buy a house for $340,000 at a 4.5% interest rate or at $300,000 at a 6% interest rate? I'll let you think about that for a minute. I'm Justin Woodall with Woodall Realty Group at EXP. And the reason I bring this up is obviously over the last several months, we've seen interest rates rise. Over the last half of 2022 and into 2023, they've actually come down a little bit from where they were, but we've seen interest rates rise, and that has caused some buyers to take a pause. But I want to explain to you kind of what we've seen in the course of all that taking place. So we really saw the market kind of peak back in spring, summer of 2022. And what was going on then? Interest rates were still low. They were starting to creep. Buyers were trying to get in before they got too high, and literally were competing against each other for houses. And we saw houses prices bid up 20, 30, 40, 50 grand above list price. That's when they peaked. And then as rates have continued to climb, the market has cooled, it's shifted a little bit, buyers have backed up a little bit, the demand's pulled back a little bit. And so what that has caused is we've seen prices settle back down below where they peaked at in the spring and summer. So if you're a buyer today and you're thinking about, should I buy a house? It's a better time now in early 2023 than it was last year in early to mid 2022, other than the interest rate. So the only thing that has changed is the interest rate has gone up. So going back to the example I used earlier, and at the time of this recording, the interest rates are kind of in the 5.5% to 6%, depending on whether you're doing VA, FHA, conventional. You need to speak with your lender to see exactly where your rate would be, but they're in that window. And I did a little research earlier. Between 2017 and 2019, when the market was really good, before the frenzy came, the rates kind of hovered in that 4 to 4.5% range, and that's where they were at, between 4 and 5, mainly between 4 and 4.5. And then what happened, we saw rates bottom out after COVID, and what happened to prices? They skyrocketed. So now here we are, rates are a little higher. A lot of buyers are saying, maybe I should wait for rates to drop. It could be that when rates drop, we see prices skyrocket again. So I want to just kind of show you that example I used earlier. Would you rather buy a house for $300,000 at 6% or $340,000 at 4.5%? Because that's kind of a realistic scenario for today. And your principal and interest mortgage payment on that house at $340,000 at 4.5% interest rate will be $1,722 a month principal and interest. At $300,000, if you could buy that same house today for $300,000 at 6%, your payment's going to be $1,799. So it's a $72 per month difference. But check this out, it's a $40,000 difference on price, which means if you get ready to sell that house in 3 years, 5 years, 10 years, you're going to get a $40,000 gain over the person that purchased that house in the spring or summer of 2022, simply because you bought it at a better price. And that's what we're seeing today. We're seeing sellers are getting a little more negotiable. Generally speaking, some houses are still selling in a day, some are still getting multiple offers, but generally speaking, sellers are a little more negotiable. They're willing to pay some closing costs. They're willing to allow inspections to happen. Whereas in the spring and summer, we were seeing buyers buy as is, 40, 50 grand above list price, no inspection, no contingencies, and there's no telling what that may be costing some of those buyers who decided to forego their inspection, and then they get in and find surprises and spend more houses. So it's much more advantageous for a buyer in today's market than it was a year ago. So if you take action today and you're able to get that house for $300,000 that would have been $340,000 last year, even if you buy it at say 6%, and again today the rates are kind of between 5.5 and 6 depending on what type of loan you're getting, but say you get it at 6%, $300,000, then in 2 years, let's say the rates do go back down. Well, as we spoke earlier, back in 2019-20 when rates started to drop, prices started to skyrocket. So if that happens again and rates drop, you've already purchased and you purchase at $300,000, you can refinance that and drop your payment from that 6% rate down to 4.5 or 4 or whatever they may be. And just all things being equal, if you were able to drop your loan from a 6% down to 4.5 at $300,000, then you're at $1,520 per month, which means you're saving $200 a month opposed to the guy that bought last year. So I know this has been a lot of numbers. Hope you've been able to track with me. If you haven't, reach out to my team, reach out to me. We can sit down with you, analyze this with you, show you exactly what you're looking at. But if you're waiting on rates to drop, in my opinion, then when they drop, you're also waiting on prices to rise. And that's what's going to happen because there's still shortage of inventory, a lot of buyers out there. So it could be advantageous for you to buy sooner rather than later while we're in this little lull in the market, even if it's a little higher interest rate, and either do a buy down. We're negotiating some buy downs now where the rate actually goes down for the first 2 years. That may be an option for you, or You buy it at a rate that you can afford. Again, the last thing I want to do is sell you a house that stretches you on a monthly budget. Buy it at at a price that you can afford, payment that you can afford, and when those rates do go back down, then you're able to refinance, get a lower payment, and you're in the sweet spot because you got a great price. And now here 2 years later, you've got a better rate, whereas everybody else is out there scrambling and bidding over houses again while prices are rising because the rates fell. So I hope this video makes sense. Again, I know it's a lot of numbers, but I want to give you something to think about. If you are considering home ownership, reach out to me or somebody on my team. Let us sit down with you. No strings attached consultation just to see if it's right for you. If it's not right for you, there's no pressure. But if it is, and you're looking to buy a home, we want to help you get in one.